It's time for Street Smart's Top 10. Number 10, ConAgra. Shares rising 5% after the company posted a quarterly profit that came in a penny above analyst estimates. The maker of Hebrew National and other packaged foods benefiting from acquisitions and price cuts that helped increase sales.
And Herman Miller, or Herman Miller, if you prefer, down a fraction after the furniture maker says that it expects first quarter adjusted per share earnings of 36 to 41 cents a share versus an average estimate of about 46 cents a share. Now, Miller reports fourth quarter earnings per share and revenue that were well ahead of estimates. So there's a little bit of everything, or a little bit of something. What am I trying to say? You know, there's something for everyone.
There you go. That's the express.
Bingo.
That's the express. Right, Tom?
Yeah, right. Something for everyone. Well, I'm looking forward to my number 8, which is my, well, maybe not mine, but Paychecks. How about that? Shares are falling nearly, we'll call it around 4%. The payroll processor posting a flat profit for its most recent quarter, falling short of Wall Street estimates. Paychecks is also issuing a disappointing outlook for the full year.
Number 7 is Navistar, up 2%. The truck and engine maker has named a new finance chief as CEO Troy Clark revamps his management team. Navistar is up about 10% over the past year.
And HD Supply, shares of the industrial distributor, are rising 3% in their trading debut on the Nasdaq. HD Supply didn't raise as much money as expected after the IPO price at $18 a share. It had earlier planned to offer the shares somewhere between 22 and 25. Had to price it lower to get this one done. That's a tough situation, Dow.
It's a tough market to be in. So number 5, speaking of tough markets, is Apple, down 1%. The company's newest TV commercials showing consumers enjoying its products while an actor reads the company's corporate philosophy are a flop compared with earlier ads from the maker of iPhones and iPads. I'm not sure if I was a big fan or not of the commercials, but still, it's what they're going to do. So I'm not sure exactly if it resonates with their core customers, guys.
Well, it's something that we're going to talk about with the CEO of Interrepublic, who obviously knows a lot about ads. So I'm curious to get his perspective.
Yeah, it's a real departure. It's, you almost feel like they're trying to preach, which, is never a good thing. You want to be told that life is good without being sort of preached to.
Well, like a sermon, I think, as you described it to me earlier today, Adam.
Yeah.
Well, those iPod commercials, remember the great silhouettes and they're waving around and doing that? I mean, that kind of stuff was catchy. This was a little bit maybe not as active.
Where's the sense of humor? Show me a little love. Don't preach to me. It's not Sunday, for crying out loud. It's Thursday afternoon.
All right, number 4 is the New York Times, up a fraction. The company is accepting bids for the Boston Globe for much less than it paid 30 years ago. 30 years ago. Bids are set to be in the $100 million range. Potential buyers include Rick Daniels, former president of the Globe, and former Time CEO Jack Griffin.
All right, let's talk about Ford, up 2%, even though the automaker says sales have slowed since the Fed signaled it could begin unwinding its accommodative monetary policy. Ford says the industry was very strong in the first half of the month, but may have slowed over the past week. Well, I tell you, we've all become such data hounds. We watch car sales on a weekly basis. Whew.
Well, let's talk about housing. Let's talk about number 2. It's KB Home, down more than 0.5%, even though the home builder reported a narrower loss for its second quarter. KB Home says it continues to deliver more homes at higher prices as that real estate market continues to strengthen.
Okay, and we're moving on to our number 1 stock of the day. It's Nike. Up about 1%, nearly 1% ahead of its fourth quarter results, which are coming out momentarily. Analysts surveyed by Bloomberg are predicting a profit of 74 cents a share on revenues of $6.6 billion. We'll see whether we get it. We've got full coverage and instant analysis for you coming up.